Good morning.
Hi, James. Great to be with you.
Thank you for doing this again. It is a little while since the last time, but it's a good, interesting trust, I think, Aberdeen New Dawn. So it's good to get a catch up on it. I think, as usual, we get you to just explain a bit what the fund's doing, please, first, and then we'll sort of dive into some questions.
Yeah, delighted to. So let me just take 10 or 15 minutes just giving you that overview and update. So just to recap, Aberdeen New Dawn is an Asia Pacific ex-Japan investment trust. So it's investing across the stock markets in Asia, including Australia and New Zealand, also as a sort of bit of a differentiator, I guess, versus some of the other investment trusts that you find in the peer group. It's managed to a long-term quality investment process, so it's neither growth nor value. So the emphasis is very much on quality stocks, quality businesses, and we are building the portfolio from the bottom up rather than top down. So selecting stocks based on our first-hand research, which is really the cornerstone of our investment process. And I have the good fortune to be able to draw on a very large team located across Asia. We have several offices. I'm based in Singapore, which is the headquarters for Aberdeen in Asia, but I have colleagues in Hong Kong, in Shanghai, in Kuala Lumpur in Malaysia, in Thailand. So a large team, and that's a great kind of research engine for both keeping on top of what the companies in the portfolio are doing, but also, of course, generating new ideas and identifying new high quality names for the portfolio. We have what do we mean by quality? I mean, everyone defines it slightly differently. We're looking at the sort of quantitative metrics that you'd expect us to be looking at. So sort of stable, predictable growth and cash generation, superior margins and profitability and return on equity and capital. Quite a big focus on balance sheet strength. We are long-term buy and hold investors, so we want companies that can sort of sustain themselves through the cycle and the tough times like those that we find ourselves in currently. But also just very clear articulation of what the sort of competitive advantage is and their ability to sort of sustain their often market-leading positions in their respective industries. But ESG is a sort of core quality criteria for us as well. So we're looking at all aspects of that, and it's incorporated into the investment process. And engagement with the companies that we are shareholders in is a key part of the process too. So all of this together leads to a kind of high conviction, active portfolio of high quality names, which, as I say, we hold for the long term, and that's delivered a pretty decent long-term track record in terms of performance. It gives you some respectable upside participation, but also protects you on the downside as well, given the quality characteristics. So I think this is more just for sort of disclosure terms. I won't dwell on it. I think we can just move straight on to the next slide, where I've given you some of the sort of key characteristics of the trust. As you would expect of a high quality portfolio that I've just described, this portfolio has a higher return on equity than the broader Asian universe, so almost 20% ROE. It's got a very robust balance sheets in aggregate, so that net debt to equity ratio towards the sort of on the right hand table is net cash overall. It gives you, given our sort of quality focus, it gives you a mix of income. I mean, we're not targeting income, but it does have an underlying dividend yield of 2.2% on the portfolio, coupled with growth as well. So you can see the historic 3-year EPS growth is 12%, and bearing in mind that's been through the pandemic years. It has a large cap bias. It is buy and hold, so you see low turnover there, about 20%. And given the closed-end nature of the trust, obviously we have the luxury of being able to use some gearing, which we do so conservatively, and it's about 8.5% geared currently. So that's a kind of quick overview of the trust. I'll come to how we're positioned shortly, but maybe just before I do that, some quick thoughts on the kind of macro picture. And I've given kind of 4 things to be thinking about here. Obviously, the sort of bigger global macro backdrop is key. So we're sort of, feels like to me that we're kind of flip-flopping between whether the US in particular and maybe the West more broadly is going to have a hard landing or a soft landing, and it seems to sort of change every month, with maybe at the moment a soft landing looking a little bit more likely, but clearly, you know, should the West go into recession, and I think our sort of house view is that a recession is still likely, then Asia is not going to be immune or unaffected by that, given particularly for the sort of large export engines and sectors. This also has implications for the US dollar, of course, and a strong US dollar tends to be bad for Asian markets. So if we would continue to see strength in the US dollar, that will be a headwind. But if we see rates sort of peaking and tapering off and that sort of reducing the strength in the US dollar, then that could be positive for Asian currencies and for sort of capital flows into Asia. And then I think the other kind of key thing that we've been thinking about here has been the state of the US and European financial sector. Obviously, we've had the collapse in Silicon Valley Bank and First Republic and Credit Suisse merging with UBS, and have been thinking about what that means for Asia and whether there's going to be more to come. I think, you know, looking at the banking system in Asia, we feel quite comfortable and confident that they're certainly insulated from sort of direct contagion. But we are sort of cognizant that this kind of risk aversion could lead to a sort of tightening up of liquidity and slowing down a growth as banks look to sort of conserve capital. But overall, Asia's banks are in pretty good health from a sort of balance sheet perspective, so less exposed to the sorts of issues we've seen in the West. And I would say more broadly, from a macro perspective, Asia feels like it's in a better place. Certainly, inflation is much more benign out here. That's meant that the rate cycle has been much less aggressive, which has been better for growth, and we are still seeing growth in this part of the world, and recession seems highly unlikely. So I think, you know, as we move to a world where monetary policy will normalize, I'm hopeful that will lead to markets focusing more and more on fundamentals, and fundamentally Asia stacks up relatively better, I feel. On China, a sort of mixed picture, and I can, you know, happy to sort of talk more on this maybe in the Q&A. I've just returned from China. I was there last week. So getting a sort of first-hand perspective. There was obviously lots of excitement about the reopening at the end of last year, and that has not played out as expected. The sort of pace of the recovery has been below expectations, and certainly consumption feels quite soft still. So a kind of mixed view there. I think from a market perspective, that has weighed on the Chinese equity market, and my sense is that there's a fair bit of value emerging within the market. So there are opportunities there that we're seeing, and obviously geopolitics kind of looms large still, particularly between the US and China. So that's been a continued kind of issue that we've had to navigate quite carefully within the portfolio. In contrast, India, I think, in a very different position. It feels like the kind of stars are aligning for India. We've liked it for a long time now. From a bottom-up perspective, we think it's home to some fantastic quality companies, and that's why we've had a sizable exposure to India for many years now in New Dawn. But that's now sort of coming together with a quite compelling and attractive top-down macro story, where you have growth feeling like it's about to accelerate with India at the sort of early stages of a cyclical recovery, and that's fueled by a new credit cycle, significant spending in infrastructure supported by government spending and policy, a recovery in a long overdue recovery, frankly, in the residential property market, and a new sort of capex cycle. So quite a bit going on in India, and I was there earlier in the year, so happy to sort of expand on that as well. And then just briefly on the micro trends, I think, yes, clearly it's a tough year. Growth has slowed, as it has all over the world, in Asia too. But we do still see growth coming through. And from a sort of corporate fundamental standpoint, balance sheets for the most part are strong. So you look at sort of net debt to equity ratios, as you saw for the portfolio, but even for the market, pretty healthy, certainly compared to many other parts of the world. Earnings growth sort of set to come back as we go into next year. I think the first half has been tough. Second half should be a bit better, depending on what happens in the West. And a lot of the sort of bad news, I feel, is priced in as well, with valuations trading kind of below their sort of long-term averages. So that's on some sort of things to be thinking about from a macro standpoint. Let me move now to the positioning of the trust. So on the right, you've got the top 10 holdings, and on the left, you've got positioning by country and sector. I've given it, this is relative positioning, which may or may not be helpful. I mean, I think it shows you that it is a very much actively positioned portfolio, as I said. So a high conviction portfolio built from the bottom up, so quite different to the Asian benchmark. If you want to see the absolute positions, those are available on the monthly fact sheet, which is on the website. But just to give you a sort of few highlights here, we have, in absolute terms, about a quarter of the portfolio in China currently, which is below the MSCI Asia Pacific ex Japan, which is the benchmark that the trust is assessed against. So underweight China, but in absolute terms, quite a meaningful position. And you can see that we have an overweight to Hong Kong. So in absolute terms, that's about 10 to 11% of the portfolio. So I guess if you put Hong Kong and China together, it's about 35, 36% of the portfolio. So reasonable weighting still in China. And that's across a variety of different sectors. And as I say, there is plenty of macro issues to be thinking about, but from a stock standpoint, still some great companies and quite a bit of value emerging there. India is a meaningful position. It's about 16% of the portfolio overall, and a larger weighting relative to the benchmark. As I said, we've liked it for a long time from a bottom-up standpoint, and that's now coincided with this favorable kind of macro backdrop. Southeast Asia is quite a meaningful weight or position in the portfolio as well. Indonesia, you can see here, is a meaningful overweight. We've got several companies there, but also across kind of Singapore, Philippines, even Vietnam. So that's a sort of differentiated position, I think, versus some of the peer funds that you see. In contrast, very little although we have the mandate to invest in Australia, you can see that relative to the benchmark, we have relatively little there. And Taiwan, we just have one stock, which is Taiwan Semiconductor, which you can see is the largest single stock in the portfolio at about 8%. We get our exposure to India via the fund rather than directly, and I can kind of explain that if needs be. And then on the top 10, just briefly, in addition to Taiwan Semiconductor, we've got a few holdings in the tech space. So Samsung Electronics at number 5 there, and ASML, which is actually a Dutch business that you may know, but it derives more than 3/4 of its revenues from Asia. So we, on that grounds, think it deserves a place or merits a place in New Dawn. And then AIA, which is one of our Hong Kong listed stocks, but really a sort of proxy for the region and China. Same would be true of Budweiser Brewing as well. I'd be happy to talk on any of these stocks. But in the interest of time, let me just move to my final slide, which is just the performance for you. So, as it has been for markets globally, it's been a tough start to the year in Asia as well. So in absolute terms, the NAV is down, and you can see over 3 months down 10.5%, over 1 year now down about 7%, though still positive on a sort of annualized basis for 3 and 5 years. And relative to the broader Asia market, we're trailing slightly for the start of this year, which is weighing on the 1 year performance as well, although we're still outperforming on a relative basis over 3 and 5 years. And that's a lot to do with stock selection in China. It has been a volatile market, frankly, with all the exuberance around that reopening and now that sort of unwinding in more recent months. So it's just been a tricky market to navigate. In contrast, I think we've seen some really good performance in our India holding, in Indonesia, and in our tech holdings as well. So that's where we are on performance. And again, I'm happy to talk more on that. So let me finish there, and happy to answer any questions.
Sure.